Hi everybody, Nick McDonald speaking. Thanks for watching this week's video on the Russell 2000 and US equity markets. Looking here, let's start with the daily chart. So Travis kindly covered for me last week while I was traveling overseas. And one of the things he noticed, and well, one of the things he pointed out, it was back here, remember, so this daily candle was the candle where Travis was speaking. So that was Friday's candle, and the Monday candle hadn't opened yet. And Travis said, watch out for the level at 828. He said he thinks that price will pull up to that level and probably get a bit of a pullback. And as you can see, it pretty much came up hit. I've got drawn this line perfectly here at 828 just to align with the exact number Travis pointed out. Came up, it hit 828 and fell right off it. Now, so clearly Travis identified quite a nice level in advance there. And what we have though now is Travis looking for that little bit of a pullback back into these moving averages before the next push on. The surprising thing here is not that it's had the pullback, but that it's had a bigger pullback than we would have expected. It's now pulling back down towards the support at 780. Now we can see how strong 780 is, especially here in recent times. One perfect touch, two touches, three touches, four touches. It's had really, really nice and really precise bounces right off this 780 level. So in fact, I don't like to clutter my chart too much with lines, but let's just put a line in there. Let's take the one at 800 out for now. So I just want to clutter that, declutter that a little bit, show that 780 here is support. Up here around 728 is the higher point of resistance. We've got some at 800 in the in the middle there, but it's in the last little while here acting less as a support and resistance level, much more so back in the past. You can see 800 is very, very key, but less so in amongst this, even though it is slightly, it's a support and resistance level we need to be aware of, but not as major as these other two. So looking at this here, what is this likely to do next? Is it likely to bounce off 780, or is it likely to break down through it? Well, let's go and have a look at some higher time frames and really start to have a good look at it. One thing to note here is, especially, I'm going to come to the monthly first. We've got a bearish monthly candle now for last month. Moving into this month, we're already bearish. And if we broke down through the lows of the last 2 months, have a look at where those lows are. Let's get precise here. The low there at 780 and the low there at 779.9. So the two lows of the last 2 months are within a tick of each other, and they're basically both at 780. So a breakdown through 780 is also going to be a breakdown through the low of this bearish candle, which by definition is going to be a lower high on the monthly chart. We haven't had that for a long time. So if we look back here, we have not had a bearish candle at a lower high than a breakdown through it since back here in 2009. So a breakdown through 780, while it's not definitively meaning markets are going down, this is just a case of probabilities, it would not be a good indication if price broke 780. It would be a lower high in a monthly chart and potential for a bigger pullback. It could be a pullback to 700, it could be a pullback well beyond 600, we'd have to wait and see. But certainly it would not be a good sign on a monthly if we broke it. If we come and look at it on a weekly chart, and another thing Travis pointed out last week, well, we had this really big bullish candle when he was speaking. Things were looking really positive. Well, now we've got this big bearish candle, which has completely invalidated all the bullishness we had from the week before. However, not entirely validated, only because we haven't broken the lows yet. We haven't broken down through 780 yet. So this becomes our real key level. Any bounces off 780 is going to be very good. Anything below 780, I'll be switching to bearish for the short term, even though the monthly chart will be looking bearish itself, which might indicate I'd switch to long-term bearishness. I would certainly be looking to bearishness in the short term, but I'm still not a major bear in these markets. I still think markets will go up. Let's have another. I still think they'll go up in the longer term. But let's just have another look at one of my reasons why before just kind of making a statement with no backup. Let's come and have a look at the Dow. So I want to compare the Dow to the Russell here. And if we come and look at the Dow's in a similar situation. Travis also pointed this one out last week, where it came up, was heading up against new highs, it hit them, and it was due a retracement. Notice the Dow has only pulled back as far as what Travis was talking about. Nice run up, hit resistance, pull back, but into the moving averages. This one hasn't pulled back anywhere near as far as the Russell, and is actually right nicely positioned in a place for a bounce up. It's also sitting right above the big number of 13,000 and nicely positioned for a move higher. So if we got a move higher in the Dow, especially early in the week, it would be meaning the Russell is also bouncing off 780 and things would be looking good. Even if the Russell dipped slightly below 780, but so long as the Dow stays in the short-term uptrend, makes higher lows and continues higher, then I would still say the Russell is safe. So I'm looking at both the Russell and Dow together here. I'm not just looking at the Russell and making an assessment only on that, because the Russell on its own, if it was just the one chart, a break of 780 would be looking bad. But taking into account the Dow, it doesn't look so bad, especially when we come and look at the monthly here and see actually the Dow on the monthly chart is making higher highs, even though the Russell was at lower highs. The Russell was just the weaker of the index markets. So on its own, the Russell would be looking pretty bad if it broke down through 780, but we do need to take into account these other index markets which are making higher highs and do still look bullish, and do, even if they pull back a little bit further, still have the potential to be going higher. So overall, I'm bullish on stocks. However, 780 is the really major key level here on the Russell. Any if it held 780 again, that would be considerable strength. That would be a really, really good sign. A breakdown through it, my preferred trade, probably not be a break through it, because any stop loss would have to be too far away, right up here above resistance. So I would be looking more of a breakdown through than a pullback in, because what can also happen, we can break a level like 780 and then dip below it but reject it and come right back above it. Hence, I don't want to short the break off it. But if it broke below, then came back and found resistance at 780 from below, then I'd be looking for shorts around about that kind of level. I think that would be the optimal short trade. Otherwise, though, early this week, until we see 780 broken, my preferred trades would still be looking for bounces off 780, lining up with moves on the Dow as well, and looking for bounces off the support level and moves higher in line with other market direction. So watching that very closely, 780 being the key level. I think I've said that enough now, but certainly something to watch. It could be, again, these support and resistance levels. The great thing about flat levels, it could be long trades off that level, it could be short trades off that level, and it could be we continue in an uptrend, or it could be we start a new downtrend from here. But even if we did break down that level, even though the monthly chart would have made a lower high, it still wouldn't be a confirmed downtrend yet, because it would just be a lower high. Remember, a downtrend needs to be lower highs and lower lows. It would be a lower high only, so only a slight indication. And at the same time, we wouldn't have a very good looking trend on either the daily or the weekly chart to the downside. So it would still be very early days, and we'd assess it again next week if it does break that level and see how it looks then. Hope that helps everybody. Happy trading. Have a fantastic week. Speak to you on next week's video.